All right, on my last video, I talked a lot about the state of the market and what I think is going to happen in 2021, 2022. In this video, I'm going to go into what it actually takes to make money if there is a market crash or market correction in one way or another. How are you going to capitalize? Let's get going. Okay, imagine I had a balloon here and it was filled with air. And then I had another balloon over here filled with air as well. One of them is labeled money, and the other is labeled home mortgage, let's say, okay? So as you spend your money, the money goes down in value, or goes down, you spend your money, it gets smaller and smaller and smaller until you spend all your money and there's no air left, okay? This is the analogy we're gonna use. So that bubble, as we spend that money, at the same time, let's say we're spending that money to pay down our mortgage, okay? The mortgage also goes down, 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 and down. So as these both go down, they both get smaller. But what happens with inflation is this big balloon over here of cash, over a year's worth of time may shrink to this much. And then as you spend that money, it can only bring down the mortgage so much, not all the way. So that's how inflation works. But that's also on the other side of the coin, that's how you capitalize and that's how you make money on inflation. And you're seeing that in your pocketbook and you probably feel it, but it's hard to put a number on it because it's market by market. McDonald's might raise their hamburger by a few cents over here, and then something else, bicycles are increased over here, and then, so it's always fluctuating, but they're trying to find that market balance. You need to be able to make at least 10% on your money to fight against inflation. And there are many ways to do that. A lot of people say gold's a great way because gold, as the value of the dollar decreases, gold prices increase, and it's kind of got a inverse relationship. So people buy gold as a hedge against that inflation. As the dollar loses value, their gold increases in value, and so they can sell it and get that money back. I have an associate of mine that we fight all the time about gold and whether it's a good investment or not, and why I don't think gold is a great hedge against inflation. As a safety backstop if something happens or the economy collapses. The reason being is because it doesn't have a lot of utility. Yes, you can make jewelry out of it. Yes, it goes in circuit boards. There is some uses for gold. But in my life, there's no use for gold. If the economy collapsed, or was in really bad shape, or hyperinflation ran wild, what am I going to do with my bar of gold? I need to buy a loaf of bread, which is $5. My gold is worth $1,800 to $2,000. What am I going to do? Am I going to shave off just a little sliver of gold, or maybe I'll just brush it on your sweater and rub off a little bit of gold, and that'll pay for my bread? Because what am I going to do with a 2,000? And that's just an ounce. So that's the size of a small quarter. What am I going to do with that? I would rather have I would rather have bullets. I'd rather have bread. I would rather have water. I would rather have assets like real estate. Those things I can trade for whatever I need. But gold's been the standard for the last 5,000 years. Well, they also didn't fly planes for the last 5,000 years up until recently. So things change. I think at some point the world will go to a cryptocurrency of some sorts, but as for now, it's a little too volatile for me to be a hedge against inflation. If you're doing a real estate investment deal and you're not making 9% or, at least 7%, but realistically, I'm going to bank on 13 because that's the range. They think the real inflation is between 7 and 13%. So I'm going to want to be at least 13% to know my money's not losing value. That's just straight out, just to keep your money at the same level and have the same buying power from year to next. You need to make at least 13%. So are your investments doing that? So I'm no economist, but because I lost all my money in the last crash, I've really become a student of this stuff to make sure that this doesn't happen again. I need to know. I could either just sit back and let things happen to me, or I could, take a little bit of time and start to understand these concepts and what happens and what makes markets move, so I'm not caught next time behind the eight ball. I want to be ahead of this. I want to be able to profit next time from these market changes. And that's what I'm going to get into now. Now I want to talk about how you can profit from all this chaos and all these things that are going to be going on. There are several ways to do it, and depending on what happens, the market could shift for a variety of reasons. The interest rates could rise, which we don't think they are, but they could rise, and that could put a damper on future housing prices. As the interest rate goes up for people buying homes, that's less home monthly that they can afford, so the value of houses goes down because less people are competing for these houses, and then the sellers have to lower their price to be competitive. That's the one way that the market could shift. The second way the market could shift is basically what we talked about with inflation. If inflation continues to go rampant, which it probably will, prices will continue to rise steadily. The other way that there could be a huge market shift is if builders go crazy with development. Now, up till this point for the past 8 years, builders have been really shy about building a ton of properties because a lot of them got wiped out in the last crash, and they're very cautious about building too much. So right now, if the builders just started building like crazy and made that so the demand, or so the current supply was maybe doubled, at that point, obviously the more supply, the values would come down. Okay, so now I want to talk about how to profit when these market changes happen. How can you capitalize? Depending on the scenario, we're going to talk about what to do in each scenario. So the first thing is, in I think any market shift, is assets are king. Let's say the values go down. Let's say the values of properties drop in half. If you have cash, you can, like the people who really made a killing in this last crash, had capital, and when the values got down to a point where it was silly, where you couldn't even build a home for the cost that you could buy them for, maybe half price in some areas. It cost you $150,000 to build this house, and you could buy it for $75,000. It was kind of a no-brainer. So at that point, those people with cash made fortunes coming in and buying up these cheap properties. So if the values go down, assets are king. Cash is king. Now, it's not the same for every scenario. For example, rents are on the rise in a lot of areas. In North Carolina, in Arizona, in Montana, the three areas that I work in, rents have been on the rise for the last couple years, quite drastically, and especially here in Arizona. They're just growing by leaps and bounds because of that lack of supply, or the lack of supply and that demand for people moving here. There's just not enough houses, rent or for sale. So rent has been going up. So here's my advice: if I were a renter right now, I would be locking in the longest term I could possibly find. I would find a landlord that would let me lock in a 3 to 5 year lease, because the rents will continue to go up. And if you can lock in, let's say today, say my rent's $2,000, and I can lock that in for 3 to 5 years. I mean, how awesome is that? That it's not going up, $100 every year. It's at the landlord's discretion. So if you have that locked in, that would be my number one advice for if you're a renter. If you're a landlord, I would do exactly the opposite. I would keep my leases no more than a year, probably even 6 months. And a lot of the ones that we're doing now are month to month, because honestly, we can increase those rents more often to capitalize on that market and to fight inflation off. So I wouldn't go longer than a year. And not all of our properties are like that. Just some of the properties that we have that are on the lower end, we do month to month. But as a landlord, that's how you can really profit from this increasing rental market, is by having short leases. And obviously turnover is an issue. If you have short leases and people turn over and leave, that can be an issue. But as long as you're keeping your rates competitive, the people that are in there will probably renew that lease at that higher rate. So that's a judgment call that you have to make. And I say landlord, here's a side prediction. I think that landlord term is probably going to go away. The PC crowd has already gotten rid of, or trying to get rid of, the word master in master bedroom, because it denotes slavery, which in my mind is super silly, because you can be a master of yourself, you can be a master of the internet, you can be a master of Mario Brothers, Master does not mean slavery, but for some reason they feel that the word master bedroom, master bathroom somehow has a derogatory term or a hurtful tone to it, so they're removing that from real estate altogether. And I'm assuming landlord will be right behind it, because you can't be a lord unless you're a bad person. So they're going to get rid of that and replace it with something. I'm not sure what it's going to be. That's my prediction. Okay, so one other way that the market could really change is if interest rates go through the roof. Back in the 70s, they got up to, I don't even know, in the high teens percentage rates. You'd go out and get a home loan to buy a house, and your interest rate would be, in the high teens. That wasn't for a very long period of time, but that would drastically change what you could afford to buy. And when that happens is, when you go to buy a house, if interest rates are high, that also puts some damper on the values. So that can bring values down. So what do you do if your interest rates are high? There's some awesome strategies to do, and I can't really go into them all right now. But if this happens, if the interest rates go through the roof, there'll be a season where there'll be fortunes made in assuming other people's low interest rate mortgage. The term is called subject to. Not only that, owner finance, seller carries, all that kind of creative financing stuff really is going to be very popular once interest rates go through the roof. Now interest rates are low. It's hard to do those type of deals. Buying and selling notes is going to be awesome during that time. It just depends on your strategy. So that one I'm kind of excited for. So you don't have to look at market changes as a bad thing. Actually, I look at market changes as a great thing. It's a way for whenever there's that change delta, there's some loss being made, or you can get in there and make money in those times. So another thing that could happen is builders could go crazy and throw caution to the wind and start building mass amounts of houses. And the way you make money from that is you either be a builder and get in on the game before it's too late, or you watch those signs and make sure you are positioned correctly, because that would affect the market and values would come down if there's too much supply. So what if inflation goes wild? One of the ways to profit from that is locking in debt while the dollar is strong, and then as the inflation starts to rise, wages get higher, the cost of everything gets higher, so you can charge more for your services. And now let's say you're, instead of charging $80 an hour, you're charging $100 an hour for whatever service you're performing. Now you take that $100 that you make and you pay down that mortgage or that loan that you had locked in at that lower rate. So that's how you can capture. That's more of a long-term play, but a mortgage over 30 years, you can really start to chip away at that and have that inflation work in your favor. If the economy totally collapses, you really want to have assets. You want to have water. You want to have grains. You want to have bullets. You want to have housing. You want to have these assets, and cash may or may not be a great asset at that point. But you want to have those assets to profit from that scenario. In addition, as inflation increases, if you have a long-term lease on your rental properties, you're not going to be able to capture or profit from that inflation. So you want to have shorter-term leases in that environment. So in the end, in most of these scenarios, assets are the key to profiting in changing markets. Whether that's a market that's drastically increasing, drastically decreasing, being nimble and flexible is key, but having those assets is really how you're going to set yourself up to be able to profit no matter what the scenario is. There's always ways you can make money in these environments with less assets, but the more you have, the faster you can do that and the quicker you can move. So I did a search for the top 10 investment opportunities of 2021. And this is what I came up with. I looked at Forbes, I looked at Business Insider, and a few other websites, and this was the common investments that I found. And here's a list of them going from best to worst, And these are gonna vary in range, and I know there's a lot of people out there that are much more knowledgeable about these different areas, and I'm not saying you can't make more in these areas, but these are just averages over a stretch of time or a range on what you can expect. As you can see, they're not that great, and if you have to make 10% on your money just to stay even, none of these really excite me. I mean, the highest one is 13%, stretched over a time period. So none of those are going to get me excited. 50% return on my money is a little more interesting. Return on my money doesn't really help me, but cash flow does. If it pays dividends, if it pays cash flow, that's what really would get me excited. I would much rather have that cash flow rather than have the larger amounts in the bank for bragging rights or whatever it's good for. So unless you're uber wealthy and you already have your passive cash flow on lock, I want that cash flow, baby. I'd much rather take cash flow over higher returns any day. So hopefully this helps. Let me know your thoughts. Let's comment down below. Let me know if there's something I missed or some thing that I didn't think about, or a profit center here that I didn't recognize. I'd love to do. I'll pin your comment if it's pertinent to the conversation. So hopefully this helped, and have a good day.